is awesome. I've been really looking forward to this. We have a really serious group of the people who are working on the serious institutional stuff in our space. This panel is called Institutional Infrastructure, and we've got 5 experts from five of some of the most exciting companies in Bitcoin right now. I'm going to go ahead and introduce them. Diogo Mónica, co-founder and president of Anchorage Digital. Zach Dexter, co-founder and CEO of LedgerX. Bryan Bishop, CTO of Avante in Wyoming, also Bitcoin Core contributor. He's also one of the fastest typists in the world. He can type as fast as I can talk. I kid you not. Scott Purcell, founder and chief trust officer of another exciting company in our space, Prime Trust. And to be moderating, Justin Schmidt, head of strategy at Talos. Take it away, Justin. Thank you, everybody.
All right. Oh, we have 1 of 6. All right, hi, everybody. I think just to get started, maybe since this is a pretty broad audience, Scott, if you want to introduce Prime Trust, then we can go down the line just briefly.
Sure, I'm Scott Purcell, the founder and chief trust officer of Prime Trust. Provide financial infrastructure to fintech innovators like everyone in the room.
Bryan Bishop, CTO at Avante Bacon Trust in Cheyenne, Wyoming. Yeah.
Zach Dexter, CEO at LedgerX, the CFTC-regulated Bitcoin derivatives exchange.
And I'm Diogo Mónica, co-founder and president of Anchorage, which is the first federally chartered crypto bank in the United States. Provide custody, brokerage, many services for institutions.
Great, thanks, guys. So, title of this panel, Institutional Infrastructure. Institutional adoption, clearly a major theme in 2021. So just to set the stage, Scott, what does it mean for something to be institutional infrastructure? And maybe provide a little bit of historical color about sort of where we were maybe when you were founded all the way up to present day.
I think infrastructure, institutional infrastructure can mean different things to different people, and many, like on the panel, we have different takes on it. But to me, what it means is it's foundational. It's what people need in order to build other things on top of. So for us, we started with the securities industry with crowdfunding and different activities doing compliance, securities escrow, funds processing, and a variety of other things, so that broker-dealers, crowdfunding portals, investment advisors, real estate syndicators, and others could build businesses on top of our infrastructure, on top of our foundation, to go out and do that. And then as we moved in and started several years ago now, servicing exchanges, stable coins, and others in the crypto space, and a lot of people, obviously everybody in Bitcoin, the whole idea was that they could use that infrastructure set to build businesses of different types, to build stablecoin businesses, to build exchanges and others. And the need was simply that people didn't have payment rails. People didn't have the ability to hold custody and make it easy, especially with IRAs and things like that. The ability to make sure that compliance is done in a BSA subject manner. The ability to settle transactions between counterparties. So for us, providing this infrastructure to people all via APIs enabled them to build all types of businesses. And that's the core, I think, of this panel, is that we all provide infrastructure in different ways, on some similar ways, but to people who want to get out there and build some incredible businesses that are driving the future of our economy.
Great, thanks. And Zach, tell us a little bit about LedgerX, and I'm particularly curious, what is it like trying to launch a regulatory forward exchange in this space? Can you tell us a little bit about that?
Yeah, sure. So we are a derivatives exchange and clearinghouse regulated by the Commodity Futures Trading Commission. A lot of folks think that the SEC is the regulator for crypto, but actually there are multiple different regulators in the US. The SEC generally handles the security side, and the CFTC generally handles the commodity derivatives side, and Bitcoin, Ethereum are considered commodities. We offer future swaps and options on Bitcoin right now, and in order to do that, we had to register as both an exchange and a clearinghouse, because actually after 2008, after the financial crisis, regulators in Congress got together. They said, all right, there's too much risk in the financial system. There's no way to track who owes what to whom. Let's create clearinghouses so that every buyer of a derivatives instrument matches up against a central counterparty, and every seller does the same. We serve that function directly. There actually hasn't been a new clearinghouse doing substantive clearing activity really since the Chicago Mercantile Exchange was demutualized. So we're now clearing for 4 different exchanges, including our own. And I'd say that the number one takeaway from our experience is regulation is actually not as hard to deal with as people seem to think in this space. It's generally speaking pretty straightforward, and the folks who are overseeing regulated entities generally want you to be doing a number of totally reasonable things, like maintaining a long and thorough business continuity plan that you probably should be doing anyway. So I think the experience has been thorough. There's been a lot of paperwork, there's been a lot of effort and time involved, but it's definitely worth it because once you get licensed, you can go out and do so much more than unregulated entities.
Great. And I guess, Bryan, it sort of directly ties in with Avanti creating a new depository institution, new statute even around what it means to be a crypto bank. So love to hear your story too.
Well, so for me, institutional infrastructure means regulated infrastructure. And the question that we have to ask when we go to get regulated is, who is the regulator? And there are certain regulators that already exist for certain types of assets. And Bitcoin has basically had to find where in this framework does it really live. And we all know we didn't want the SEC, we didn't want it to be a security, and it's not. We basically are a commodity under the CFTC, as Zach mentioned, so that's great. But if you want to do business in the United States, you need dollars. And to have dollars, you need a bank. And it needs to be a depository institution that is able to actually handle dollars. One way or another, every single company has to have a bank at the end of the day, whether that's going through a correspondent that then talks to another bank that then talks to the Fed, or whether it's a bank that talks directly to the Fed. You need access to the dollars. And part of the problem that the community had earlier on was getting access to banks. Banks were not crypto friendly. They are now more crypto friendly, but at Avanti, we have an opportunity here to provide banking infrastructure, an actual bank regulated by a state bank regulator, supervised, that can offer to the cryptocurrency community and be crypto native.
Yeah, great. And Diogo, I think Anchorage, we sort of all know that it became very popular very quickly on the institutional custody front, and now popular on the trading and financing side. And I think my question for you probably is, what are you seeing? What are institutional clients coming to you and asking for in terms of products and services, and how might that differ from, say, the more retail side?
Yeah, so I would compare and contrast to 2017, where we saw retail-dominated run-up in prices, and all of the bulge bracket banks and all the fintechs were coming to us, essentially asking us what they should be doing for their crypto strategy. That was effectively the conversation. Today, what we're seeing is exactly the opposite. We're seeing in 2020 and 2021, all of these bulge bracket banks come to Anchorage, and they have very specific needs and very specific products that they want to build. And it ties into the previous conversation, because one of the reasons why we went the hardest path or the oldest regulator in banking in the United States and became a federally regulated bank was because these bulge bracket banks wanted to effectively be at the same eye level with their platform and with their provider. And so we are regulated the same exact way as BNY Mellon and Goldman and JPM and Bank of America are regulated. And so it becomes a lot easier for them to provide them this institutional infrastructure that they need. And so there has been a massive transition into them coming with very specific products that they want to build, whether they're lending products or whether they want to provide services for ultra high net worth individuals. It's actually not just one buyer. One of these institutions has 4 different buyers internally. We talk to the treasury team that has a totally different set of needs from the ultra high net worth individual team, that has a totally different need from the custody team, that has a different need from the brokerage. So all of these teams actually are coming to the space with very concrete ideas and are looking for a provider like we were talking about that is regulated, that is safe, that has been in operation for a long time, and that has proven itself over and over again to support a lot of the things that are happening in crypto.
Yeah. I think a common theme here institutionally is this idea of serving clients. And sometimes the clients themselves have clients, and sometimes multiple different types of clients, exactly what you're talking about. Scott, I think one of your sayings is it's a favorite saying of mine, and I usually quote it with attribution sometimes. But you're known for saying that Prime Trust customers change the world. So what do you mean by that, and how do you think about this sort of institutional client service that is this key part of being within institutional infrastructure?
Well, the thing I tell my team is that working at Prime Trust is fantastic. I mean, it's really a fun place to work, but we don't change the world. We don't. Our customers change the world, and they're doing amazing things. We've got Dapper Labs with NFTs and Binance and different exchanges and Bittrex and Abra and stable coins, and there's so many Swan. There's so many creative things happening. People are literally changing everything from finance to collectibles to the way money works, and they're changing the world. We don't do that. We're the foundation for them. And so that's where we take pride in doing that they can go do those things because of the services that we provide. And so for us, it's a matter of making sure we can do that. And sometimes from an infrastructure perspective, and we all experience this, and I'm sure everyone experiences this, like for Prime Trust, we plan to grow 10x this year. That was our plan in December when we were forecasting. We grew 10x in the first 6 weeks of this year, and that scale's continued. So, providing financial infrastructure is really, really hard, and the team works their butts off to make it happen. But we do that because of the things we enable people to do, and it's really cool to see.
Yeah, great. And I think one of the speaking of infrastructure, one of the key primitives in this space is borrowing and lending. So Bryan, with this idea of borrowing and lending be such a key part of any financial system, what does this institutional landscape look like around this whole? I mean, there's a lot of borrowing and lending going on, but particularly from a regulated institutional perspective, what does that look like?
Well, the landscape of the regulated entities in this space, yeah. So, one of the important questions is venue and jurisdiction. Where are you actually going to operate, and who is going to be the regulator that supervises it? Right now, I think Wyoming is one of them. Wyoming has invested a lot of time and energy both into their laws, and also the Wyoming Division of Banking as well has been open to exploring this with certain constraints, right? And the constraints are you're going to be supervised. And Bitcoin has basically had to go out and ask, where are we going to be supervised? I think Wyoming is a really interesting option that people should seriously consider. Yeah,
great. And Zach, I think another key primitive is very much around these financial systems are derivatives. So can you go into a little bit more detail about what the institutional market for options and futures looks like?
Yeah, I think the institutional market for derivatives always evolves with over-the-counter first. We saw that on the last panel. That's where a lot of the U.S. volume is today, simply because once you go onto listed products, you've got to have properly regulated exchanges and clearinghouses with approved products and approved margin models. And in crypto, that's not so easy to do. That takes a while. So in the US today, a lot of the activity is over the counter, and I think that's going to remain the case for the next 12 to 18 months as people like us scale up our listed product offerings. Internationally, it's obviously a little bit different. There's a ton of retail demand. There's a ton of demand for leverage. A lot of it's speculative, and that's driving a lot of the DeFi yield and interest rates, which is super interesting. I think we will start to see that here. It's just going to take a little bit longer.
Yeah, and just switching gears a little bit, Diogo, I wanted to ask you about, I think, sort of entrepreneurship broadly within this institutional crypto space. So there's probably a few, budding crypto entrepreneurs in the audience. What is it like to, have a successful career, have a very comfy job, and then have some idea about starting a company, and you need to, sort of figure out if you want to do it, and sort of all the pressures and interesting, dynamics of going out raising capital. I think people here would love to hear a little bit of that story.
Yeah, I mean, I wouldn't say I made sure that I've never had a comfy job. I always resisted the pull of the Googles of the world, and I always think those are actually the wrong decisions. If you're not uncomfortable, if you're not, feeling like you can't really do the thing that you're currently doing, then you're probably in the wrong place. So for us, for both my co-founder and I, we have actually been working together for 11 years, every day of our lives. For the past 11 years. We joined a company called Square very early on. We joined the same week. We were employee 40 or 41st. We led the security team at Square for 4 years, did quite a few things together, then ended up going to an open source company called Docker that runs on over half the internet. And then what ends up happening is that the universe handed us, literally in a silver platter, the Venn diagram of the things that we were good at. Before Square, I was working on something that was absolutely useless 15 years ago, which was a PhD in distributed systems, which turns out it's what blockchain is. And then financial infrastructure at Square, and then security at scale at Docker. And so clients were coming to me to ask me for help consulting because they were losing their Bitcoin keys. And in fact, they were offering me 20 to 30% if I could break into these wallets. So that was the demand. That was how bad things were. Incredibly sophisticated investors in 2016 and 17 literally forgetting their passphrases to their wallets. It is a big issue, and it's a big issue for institutions the same way that it's a big issue for individuals. And there were just no solutions at a time that were institutional ready, and nobody was really thinking about the security and the types of infrastructure that did not exist and that it takes to not to protect hundreds of thousands or millions of dollars of Bitcoin, but trillions of dollars of Bitcoin. What does that look like? And so what happened was this perfect founder market fit of us working on key management at scale at very large institutions. When we left Square, it was $100 billion, publicly traded company. And so it's just like, it feels like the opportunity found us. And in fact, today, some of Encourage's clients are still clients from my consulting when I was actually just consulting for people. So it's kind of a fun way for the market to have found both Nathan and I.
And were you able to break into those wallets?
Yes, I was, and that's the most interesting part is that they actually had the seed, but they had the seed of an old version of the software that had changed the words. So the only thing you needed to do was actually go back in time, generate the new version, and actually recover the seed. But it just, that shows you how bad things really were and how much we needed this infrastructure. We needed security, we needed regulated security, and we needed liquidity and all these other elements for institutions to come in.
So this topic of scale is actually is perfect. And Scott, you mentioned this. We're planning to grow 10x, but we've got some long time frame where we're trying to do this, and then the world has different plans. So talk about what that means in terms of trying to 10x in not decades, not years, but weeks.
It means from going from 45 employees at the start of last year to 375 today. It means onboarding incredible executive team. Across the board, people who are deep in technology, people who are regulatory. We've hired 3 people from the OCC in the last 60 days alone. We have, the former deputy banking commissioner of Wyoming is my chief regulatory officer. You build a bench across the company so that you have the foundation to grow and scale. And but then you wind up asking the impossible. You ask people to make sure that systems can handle 10x growth, not just in a year, but in 6 weeks. To make sure that your bank partners can handle, the correspondent banks that we work with, can handle the volume of activity. Hundreds of thousands of ACH transactions a day, over $100 million just in ACH alone every day. And so much, the custody and the transactions. There's so much to do, and you wind up breaking your people because it's tough, it's hard work. And so you've got to create, I think the biggest thing you have to do, and I'm sure one thing we'd all agree on, is creating the culture of the company so that you not only survive the growth, but you thrive through it. And that's the hard thing because it's so tough on the team. Even though we're hiring as fast as you can, they're great people, but you wind up burning people out. It's just so much work. And so you've got to have the right culture that they still enjoy coming to work every day.
Maybe Justin, let me just point out one thing that I think people don't think deeply about, but when you talk about 10x, it's very relevant, which is it turns out that the security systems that you build for hundreds of billions of dollars are not the same security systems that you need for trillions of dollars.
Yeah, no.
And so it's actually a systemic issue right now in crypto is the fact that you have solutions that were built for a set of assumptions, and the assumptions are broken in a matter of a couple of months with a price appreciation. Think about this. Think about a nation-state attacker is willing to spend 10% of the amount of assets that you have under custody to break into your systems. And if you have $1 billion, 10% of that is $100 million. But if you have $100 billion, 10% of that is $10 billion. That is a very different type of system. You know, that's ninjas falling from the rooftops and helicopters kind of security systems that you need. So I think this is very important to point out that it's actually a systemic issue. And when you think about institutions, they need to see this, and we as an industry need to be good, not just thinking about the 10x, but thinking about the 1000x.
Yeah, these are very, very tough problems to solve from both a regulatory perspective, a math perspective, just systems. It's across the board. It's incredibly time-consuming and hard.
Yeah, and I guess switching gears a little bit, Bryan, I wanted to, and I would sort of be remiss not to ask about this, but sort of the origin of Bitcoin, right? The anti-establishment ethos, right? Of, you know, be your own bank, you know, that type of thing. So we're all sort of up here, sort of institutionally talking about Bitcoin. So maybe there's some cognitive distance here, maybe there's not. Tell us how you think about that.
So why would there be banks in Bitcoin? You know, how does that make sense? You know, Bitcoin started off in, you know, unregulated Wild West, the frontier. And so you're going to bring banking into Bitcoin, or it's going to get banked? How does that compute? Well, at the end of the day, if you want to do business, you have to follow some laws. That's just rule of law, is how it works. And so at the end of the day, I do think there is a way for Bitcoin to be completely compatible with financial infrastructure. So I actually used to work at LedgerX. I joined in 2014, and they weren't launched yet, and you know, it was still an open question at that time. Is there a way that Bitcoin can be regulated? And the thesis was yes, and it turned out that was correct. And now it's less of a question. Now people are like, well, of course you're going to get regulated or something. But at the time, it wasn't obvious at all. It was actually a really big question. You know, maybe it would be something completely different. But now I think it's becoming quite clear that, you know, Bitcoin is here. It's going to continue to grow, and it will be part of the U.S. financial system for years to come.
Yep. And I guess, you know, thinking about the future, and Zach, maybe we can start with you, and maybe everybody can chime in on this. But what are you guys seeing now that is most innovative? That is most you know, what's next? Like, what's exciting out there that you guys are seeing that you think is coming down the pike that's going to be game-changing in terms of institutional infrastructure?
Yeah, I mean, I think the hardest problem in this space is how do you wrap the crypto rails that we've created with a regulatory wrapper? How do you actually start running everyday transactions on the crypto rails as part of the formal, regulated banking and financial system? That is not a solved problem at all. It's entirely unclear because a lot of the actors on these networks are not regulated actors. They're not KYC. There's no AML. So if you're on the same network with a bunch of those folks, how do you use those rails in a regulated environment? That is the big question, and I think the hardest challenge to solve. But we're seeing some initial thrust at solutions right now in DeFi, which I think could be very interesting.
I think I'll chime in. One thing that is kind of fascinating that is happening, and we're seeing a lot of these companies which are, you know, well, let's call them fintechs, but they're actually just crypto-specific fintechs. And these companies are fundraising in crypto. They are paying their salaries in crypto. They are offering checking accounts using stablecoins, crypto. They're offering savings accounts in crypto. They allow people to invest in their future by buying Bitcoin. And then they have Visa credentials that allows anybody to spend their crypto directly settling with Visa crypto natively. At no point does this company ever touch fiat. At no point does this company ever have any relationship with a traditional bank. 100% of the banking services are effectively being provided by Anchorage, and at no point do they know that fiat is there. Actually, the only way that they engage with fiat is this abstraction that this stable coin is pegged to this other thing that is called the fiat currency. It is the only abstraction that they actually touch. And what's happening is that we see consumers looking at apps side by side. One is traditional bank and FDIC insured, and the other one is full crypto, potentially not FDIC insured. But one generates 0% yield, and the other one generates 5-6% a year. And they're just saying, I want this one. That's something that we're seeing that is absolutely fascinating. And 2021 is definitely going to be the year where we're going to see these get to massive consumer adoption, because it is fascinating what you can do without ever having to actually ask for permission, which is what Bitcoin has always been about, right? Permissionless innovation. Everybody can engage, everybody can enter the ecosystem without the current gatekeepers allowing them or not.
Great. Bryan, Scott, we got about 15 seconds left for each of you.
I agree with that because it's scratching the surface of what we're seeing. Those are great use cases. There are so many more. We're seeing the tokenization of everything. It all started with Bitcoin. That's where the momentum is, and what it's leading into, the types of innovation that we're seeing in so many different industries, whether it's real estate or collectibles or finance, with the banking. It's just absolutely incredible. And we may have all been doing this for some years now, but for the rest of the world, this is just getting started, and everything we've done until now has just scratched the surface for what's coming, and it's awesome.
Thoughtful stuff, guys. Thank you. That's time for us. Please join me in thanking Scott, Zach, Bryan, Diogo.